Neil Isaacs, the Raleigh business broker. I'm going to answer the top questions that business owners Google answers for. And I'm going to categorize it into 4 different topics: general selling processes and legal considerations, business valuation and pricing, get a lot of those questions, specific business situations around debt, profitability, competitors, and lastly, ideas, intellectual property, and the different platforms that are out there for business owners. Number 1 question: is selling a business a taxable situation? And the answer is yes. Of course it is. The government wants a piece of everything. They want to wet their beak. So the short answer is yes. The longer answer is depends on deal structure. I've had people say, hey, somebody should buy this business because there's a net operating loss and they could save money in taxes by buying this business. That's usually a business that's made some mistakes in the past, and you're not buying for cash flow in situations like this. But yes, a business sale is a taxable event. Talk with your accountant, right? Here's my disclaimer. And I'll also say that skilled intermediaries, I am a business intermediary. We serve our clients to sell their business. This content is generalized, but I can say that a great business intermediary will have the conversation with the business owner about what is your net. What will your takeaway be after you pay the taxes? Because that's all that matters. And oftentimes the taxes are more than the broker commission. Talk with your CPA. And if you have a great intermediary, you can structure the deal so that the asset allocation is most beneficial to you. Lastly, I won't get too far off because we're only on question number 1, but a stock sale versus asset sale can make a huge difference on your taxes. So start with your intermediary and your CPA for answers about taxation. Question number 2, what documents are needed to sell a business? The direct answer is profit and loss statements, tax returns, balance sheet, and lease, your current lease, if it's a location-specific business. The longer answer is that the profit and loss statements tell your financial story most directly. Your cash flow can be found with some math on the profit and loss. But savvy buyers want to see a balance sheet and tie it to the P&Ls, and the tax returns determine if the business can be SBA financeable, if your business can get a loan for the business buyer. I mentioned bank statements. Most business buyers do request bank statements, and we usually don't share these till diligence. In fact, we don't share the tax returns until diligence either. The question wasn't when do you share these documents, it's what documents are needed to sell a business. If you have tax returns, P&Ls, a balance sheet, and a lease if applicable, you probably got enough to get started. Next question, do you need a license to sell a business? I am in the state of North Carolina. I'm going to answer this as a business broker and a real estate broker, and in answer to the business owner. No, you do not need a license to sell a business in North Carolina. You do not need a license to be a business intermediary and sell other people's businesses in the state of North Carolina. You own the business, you have a right to sell it. Now, in other states, the sale of a business is tied to the real estate commission, and real estate commissions have oversight over the sale of businesses. In those states, you probably could sell your business in those states too, because if you own real estate, you can sell it without a real estate broker. But if you want to sell someone else's business, you may need a real estate license. So that being said, caveat here is anybody can be sued for anything at any time. Keep in mind, even though you don't need a license, it doesn't mean that you are wading into some legal waters once you start to deal with contracts and representations of what's for sale. Again, an intermediary can help you with that as well. And great intermediary will bring in a qualified, reputable attorney to close the deal at the appropriate time. How do you sell a business quickly? The industry average to sell a business, and we publish the IBBA's market pulse survey on a quarterly basis, and that is our go-to for sale of a business, is 7 to 9 months, a year for larger businesses, that's a long time, much longer than a house. And when we talk with business owners about their options, they don't like to hear that. And the good news is if you know what the most probable sales price is, I'm just going to make up, it's $500,000 to sell your business. That's what the market would pay. You can sell a business more quickly by saying it's worth $500,000. I would take $400,000. Conversely, if you ask for $1 million, it's going to take longer. You're going to have to say no to a lot of $500,000 offers. That's how to sell a business quickly, is to A, offer a great price, and B, offer great terms. The business that is offered, that's priced at $500,000, that's valued at $500,000, and the owner says cash only, no seller financing, not applicable for bank financing, it's going to take a lot longer than the alternative. So to how to sell a business quickly is you know the appropriate price and you offer it at a market discount. And then you have all your documents together. That goes back to what documents are needed. Sometimes we get buyers quickly and then the business owner can't produce the documents that the business buyer needs, and that slows things down. How to sell a business privately. Speaking to the business owner, if you're thinking about selling your business yourself, it is extremely hard to do a private sale. This is one of the arenas that a intermediary adds tremendous value, because a business intermediary can not be you, right? They can use a different email address, different phone number. You don't answer the phone when someone calls, but you can sell a business privately if you set up this alternate contact methods. Throw a website together, get a Gmail, get an alternate number, have someone else answer the phone. But if you answer the phone selling your own business, cat's kind of out of the bag. Selling a business privately is best done through representation, and great intermediaries use many methods. Blind listings, redacted statements. Yes, you can sell a business privately. It takes a lot of practice and processes and people to do it effectively. But the best transactions, the landlord knows, if there's a landlord. The managers do not know. The employees definitely don't know, and the customers don't know. And they find out, if they find out, the day after the sale. How to market a business for sale. We talked about doing it privately, but there is an art to marketing a business. It's unlike, I joke that my real estate friends, hey, 123 Main Street is for sale. Go check it out. You can't do that with a business. So there is an art to saying, this is an incredible business. It's in the so-and-so market. It's in this industry. Here's some top line revenues, and this is the cash flow. And then to sell that story without giving it away, that can definitely be done. And then you want to get that, we call that a blind listing, out to as many people as possible. There are, I call it the Zillow of business brokerage. There are websites that you can list a business. And then there is social media, email marketing, word of mouth, going to associations. That's another thing that we as a firm spend a ton of time and resources on, to make sure that the blind listings, not the documents that identify the business, we have separate documents for the right stage of that, but we call it the teaser listings, get out to as many people as possible. Essentially, you want to create a huge pool of potential buyers, knowing that you only need one of those, and then you want to carve down that group until you find the subset of qualified buyers, and then of those, the ones that'll get to the end. But marketing is where it all starts. What are the steps to sell a business? Here's how we do it at my firm. I'm not in a screen sharing capacity here, but we start with a conversation with a client. We figure out if we're a good fit to serve them. And then we earn their trust enough to get financial statements. We talked about that, with which documents are needed. We establish what the cash flow is, interview the owner based on those financial statements, make sure we're correct and verifiable. And then we do the research of finding what other businesses have sold for, and we report back to the client, this $500,000 business, your peers that have done this type of revenue and are similar to you, plus or minus $500,000. And then we build this blind listing that I talked about. If the owner's okay with that, if they're prepared to go to market at the most probable or close to its sales price, we'll go to market in this confidential format. So creating the blind listing that I referred. Then screening buyers. You attract the buyers and then you screen the buyers. None of this is like real estate, except that it is listed on a Zillow-like thing. Once you get the right buyers and you have the right conversations, then it does turn into more of a real estate deal. Offers to purchase, due diligence is done. Due diligence is different than buying a business, than buying a home. And that instead of asking about lead paint and stuff like that, it's more, do you really make the money that you make? Can I, as a business buyer, run the business the way that you are? HR due diligence, legal due diligence, and financial due diligence. This is what the buyer, you let the buyer go through that. And then the closing happens once the diligence is done. And that's when money moves, that's when ownership moves. And there's a transition period that you don't get in real estate, where after the deal is done, the owner helps the new buyer for some agreed upon amount of time. Those are the steps. Those are the 4 big categories. There's probably 100 steps within those broad steps, but those are the steps to sell a business. Prepare, market, go to market, and then basically screening and closing the right buyer when you have the offer that you want. What legal requirements are there when selling a business? So I'm gonna approach this question a little bit differently. When we go to, before was how do I sell a business? This is what legal requirements are there when selling a business. They sound silly, but you have to own the business and you have to have the capacity to enter a contract with someone that wants to buy your business. So we look to tax returns to validate, usually with K-1s. We look at the Secretary of State. We just look for proof of ownership. Sometimes ownership changes during the year, so then we can get some documents. If operators change ownership, then we want to see that both owners have agreed upon what one owner is saying with documentation. Basically, if you own the business, you can sign what's called a corporate resolution to sell. And now you've made a representation to a buyer. Yes, I do own this and I can sell it. So the legal requirements when selling a business, I hope I answered that question correctly. Corporate resolution to sell is probably the most important thing. What happens to employees when selling a business? The number one question from business owners that we get is, what happens to my employees? Will they all have jobs? And the number one question we have from business buyers is, are all the employees going to stay? I don't want to lose any employees. Most of the time, the employees of the business do stay with the business. It's part of the value of the business is the business owner has assembled a team, and the business owner hopefully isn't doing all of the work, him or herself. So the employee should stay. We always represent that, if you are going to, as a business buyer, if you're going to pay the employees what they're used to getting, there's a high probability they're going to stick around. And when we get into buyer owner meetings, we typically ask the buyer, do you intend to, when we get closer to a transition, if we can say you're going to offer them the same employment package they have, that's pretty much what they want to hear. If you don't, then we'll talk about that in advance. But 9 out of 10 times, sometimes owners say, hey, Susie, we're probably going to let her go anyway. So we'll have those difficult conversations. Owners always have 1 or 2 that they know they shouldn't keep. But most of the time, all the employees stay. And it's we work with the payroll providers just to make sure it's done appropriately and everyone's moved over. There's a little bit, that's HR diligence essentially. What is the checklist for selling a business? We talk about legal requirements. The checklist, I mentioned the corporate resolution to sell. This is more broker specific. We look for spousal consent in the state that we live in. You could own a business and you could be married and your wife doesn't own any of the business, but by virtue of being married, she has some spousal rights, or he has some spousal rights. So we look for buy-in from the spouse. That's important for it's a big decision for a family. So you want to have that underway. We look at the financials. We make sure we have the most updated financials. Buyers care most about the trailing 12 months. So if you don't have the financials, then you might want to get those updated with your CPA, your accountant, your bookkeeper. And you do not have to have a tax return done. Most of the year, your tax return's not ready. Unless you're selling a business in March or April, you may have the tax return for the previous year, but a lot of business owners extend. If you have up-to-date profit and loss statements, that's going to be the most important thing as far as checklist for selling a business. I would put together a list of VIN numbers for all of your vehicles. I would put together an asset list. I would put together a personnel list. These are all of our employees. This is what we pay them. This is their tenure. These are their benefit packages. What we find business buyers are most interested in is if it's a space-dependent business, the lease is super important. And then how do you make your money? Is it sustainable? Is the cash flow accurate? And tell me about your team. I want very specific details about your team. There's an appropriate time to give the nitty-gritty details on the team, but on a top level, you want to have an employee chart without names that shows how many people, how long they've been there, what they do, and how much they get paid. That's the checklist for when it comes to selling a business. Is selling a business considered capital gains, right? So originally I asked, is it taxable? Now the internet is asking, is selling a business considered capital gains? And back to asset sale, stock sale, this is for the business seller. Yes, if it's most likely going to be an asset sale, there will likely be capital gains. I use the fictitious $500,000 business seller. They started it with just a truck and they built it up and they kept adding assets. Their basis for the business may be close to zero, especially if they depreciate everything. If they sell it for $500,000 and they say that $250,000 of that is trucks and other heavy assets and the rest was Goodwill or something else plus Goodwill, it's really going to be that half that $250,000 that's taxed as capital gains. So much like a stock, you buy Apple stock at 100 and then it goes to 200 and then you sell it, you're going to pay capital gains on that 100 difference. It's very similar calculation for a business owner. What did it cost to get this business going? And then now that you're selling it, how much more is it worth? Again, that business intermediary can assist with the asset allocation that I mentioned. Maybe it's not $250,000 of heavy assets. Maybe it's 100,000. So that's a question that you definitely want to know what the asset allocation is. As business that sells for $500,000, that's the big picture, but you got to know what is being bought and sold. And that can be categorized differently, and that affects your taxes, especially your capital gains. Your intermediary can help you with that. When is the right time to sell a business? I love this question. We got into what is the most probable sales price. Here's my advice. Don't try and time the market. The right time to sell a business is when the business owner is accepting what the most probable sales price is and they're emotionally ready to accept those proceeds. If they got more gas in the tank and they're not happy with the most probable sales price, don't try and sell your business. Don't try and ask for more than it's worth. Make the business grow. If the business owner is past due and they have no more gas in the tank, we have a lot of tough conversations about, hey, can you grow it? Because this is what people are going to pay you. If that's not enough and you can't grow it more, then you may want to try and get comfortable with what the most probable sales price is. The price may drop if the cash flow drops. The price will drop if the cash flow drops. So the right time is simply when the business owner is comfortable with the most probable sales price. Working with an intermediary can help you get to that sales price. When selling a business, how do you determine the price? A lot of valuation questions asked in different ways. Neil's back of the napkin valuation. This is my free valuation. This is applicable to Main Street businesses only, different valuations for larger businesses. But for businesses that sell under, say, $1 million, 90% of them, the vast majority of these businesses will trade for either 1/3 to 1/2 of annual sales. So that $500,000 business, maybe they do $1 million a year, sells for $500,000. That's 50% of annual sales. Or, and more importantly, 1 to 3 times cash flow. So this $500,000 business, maybe $1 million comes in, and after they have all expenses, they're left with $250,000. $250,000. Maybe the business profits $100,000. They pay themselves $150,000. But what's worth to the owner? If it's $250,000, 2 times $250,000 is $500,000. That's the most simplistic valuation I can give you is 30% to 50% or 33% to half of annual revenues, or 1 to 3x of cash flow. Most people don't know what their cash flow is. So revenues are a rough rubric. There's exceptions to every rule. How to determine the price to list a business. So now the internet's not asking what is the appropriate price. They're asking how much to list it. There is a science here. If you know it's worth $500,000, do you list it at $500,000? Or do you list it at 550? Or do you list it at $1 million or 10 million? Once you know what your most probable sales price is, there is some strategy in going to market. I will say this. If you ask for $1 million or 10 million, there will be people that would have bought it for $500,000 that never ring the doorbell, right? You're trying to have company over. You want to have house guests. If your house is scary or overpriced, they're not even going to come in the front door. You can leave a buffer on the sales price, but you don't want to go so out of market that it's just not going to happen. So I mentioned this $500,000. I live on a cul-de-sac, and my home is close to $500,000. By the way, North Carolina, it's not a lot of money where I'm at. But here's my point. Every house in our cul-de-sac, there's a 460, there's a 540. The average is $500,000. The chances of me getting $1 million for my house, why would somebody pay that? They could buy one of my neighbor's houses as it goes on sale. So that's what market value is, and it's driven highly off of cash flow. If my house is worth $500,000, yeah, 550 people would look at it. 600 less people look at it. $1 million, nobody even asks. So there's some strategy there, and we work with our clients, and that gets back to seller motivation as well. And we talked about timing of sale. In business valuation pricing, when selling a business, do you include the assets and the inventory? And the answer is, I'll start with the assets. It's not what the business owner wants. I did a video called What About My Stuff? And it's based on a common experience we have where we share a valuation, and the owner says, well, that's great, but they don't get my trucks, do they? Like, I can keep those, or they pay extra for my stuff, right? I don't want to give them the forklift. The answer is yes. The most probable sales price does include the assets. There's exceptions. A lot of people have assets they never use and they're not productive, but essentially the business buyer is buying the cash flow. They need every asset that's contributing to that cash flow. If you can make an argument that truck has never been used for the business, then just sell the truck if it's not going to affect the cash flow. That's just bad management of your assets. Now with the inventory, that's a little bit different. It will affect financeability, but sometimes business owners get paid for inventory in addition to this multiple of cash flow that we discussed. Oftentimes it is included. So there's not a great answer for is inventory included. Most of the time it is. If you have a business with a ton of inventory, you got a different problem, because I mentioned financeability. Banks just want to know that the business buyer can get into the business and have what they need to sell. And I've met owners that have $3 million of inventory and they make $500,000 a year. And there's just no scenario where they can get paid for the business and the inventory. So we have to play with the deal structure to make that happen. How do I find out if a business was sold? Great question. I love the internet. The answer is it's tough. In real estate, you can look it up. It's public record. And in a business sale, these are confidential sales. So there's not going to be a public ledger of sold businesses, the privately held sold businesses. You could ask the business broker, we never even share details of sold businesses after they're sold, but we will say that one's no longer available. So if you know who's listing it, you could do that. You could be sneaky and go there if it's a public location, ask for the owner. But there's not a great way to find out if a business has already been sold. Do you include the debt when selling a business? Great question. Back to asset versus stock sale. If you sell a business as an asset sale, and most business buyers' attorneys insist on this for Main Street businesses, they have to be sold free and clear. What that means is the business owner keeps the cash in the bank, probably the accounts receivable, but they pay off all of their debts and they pay off their liabilities. The business buyer is bringing basically a clean slate, and they start without debt. They may bring their own debt to acquire your business, but it's sold free and clear. Now with a stock sale, it could be different. And there are reasons why stock sales make more sense. In that case, the business buyer is stepping into the business and they are owners, and the owners are responsible for the debt. It can get complicated. But most of the time, the debt is not included when selling a business. So the business owner sells for $500,000. If they have $100,000 in debt, their net proceeds would be $400,000, and they would be wiring a payoff, money to a payoff of a loan at the closing, and that's part of the closing process. So much like selling a home and whatever mortgage is left off. What is the difference between selling shares versus assets of a business? That is the very definition of a stock sale versus an asset sale. So I'll spend just a minute on this. John Doe, business owner, seller, selling is an asset sale, and Susie buyer sets up her own corporation and buys the furniture, fixtures, equipment, and even the name John Doe Enterprises or John Doe's building facility, and it becomes Susie Buyer LLC's business, doing business as John Doe's building supply company. So she has a new EIN. Her employees get new W-2s at the end of the year. It's a totally different entity, but to the public, it may look the same. Versus John Doe buyer and John Doe seller and Susie the buyer, if they do a merger and Susie joins and buys the shares, maybe John Doe leaves some of his shares in or what have you. She buys all of the shares. She's now, whatever his corporation was, she's stepping in as a managing member of his corporation. She's not starting a new company. She is taking shares. So whatever his tax situation was, whatever his liabilities were, if there was a bankruptcy and it's hidden in the back there, that's become Susie's problem. That's why most business attorneys recommend a asset sale. It tends to be cleaner because buyer does due diligence, but it's impossible to 100% be sure that every notion has been considered. How do you value goodwill when selling a business? This is a tax question, and people don't know what goodwill is, and it can mean different things to different people. In the hypothetical scenario that I was using earlier with a $500,000 business sale, I said that trucks are worth $100,000. If that's the agreed upon asset allocation, the goodwill is the difference between the $500,000 and the $100,000. There will be other things that are carved out, non-competes and maybe consulting. There can be other assets, intangible assets, but the goodwill is the difference between the hard stuff you're selling and the value of the company. The fact that the customers call the phone number and know the brand, and the business has made $250,000 for the last 5 years in a row, that's why it's worth more than the assets. And that's the goodwill. That's the cleanest answer I can give to how do you value the goodwill. The value of the goodwill is part of asset allocation, and it's basically the difference between the tangible assets and the selling price. Can you sell a failing business? And the answer is yes. We talked about price. I gave Neil's free valuation of 30 to a third to a half of annual sales versus 1 to 3x of cash flow. When this says failing business, I'm assuming it's upside down, that it loses money. You can't put a multiple on a negative cash flow. You would be, as a business seller, you'd be paying the business buyer to take the business off your hands. So now you're looking at that on 1/3 to half, but it's probably gonna be less than the 1/3 if it's failing. It's extremely hard to sell a failing business because when you think about it, it's probably the business owner who knows the business most intimately and knows what it takes to turn it around. The business buyer is stepping into, it's catching a falling knife, is the expression that we hear. The business owner is stepping in. They're going to pay the business owner money and then lose money. It's an onerous proposition, pardon the pun, but there are reasons why a business buyer would do this for strategic reasons, but they're gonna pay a discount. It is possible, but the business owner needs to accept the situation they're in and think about their liabilities. Often business owners and failing businesses are looking at, if I close my doors, I still have to pay my lease. If I have a franchisor, I may have to pay them. There'd be a lot of legal fees. So sometimes taking enough to get out of the hole that you're currently in and have someone else step in and take over the liabilities that you carry on a month-to-month basis, sometimes that is the best answer. It's not a fun process. It's not a win-win most times, selling a failing business. What if you have a business to sell and there's debt or some other profitability situation? Can you even sell a business with debt? The answer is yes. Of course you can. In fact, the minimum price of a business for sale as an asset sale is how much do they owe? Look to the balance sheet. See how upside down they are? That would be the minimum that a business can be sold for, probably if you ask an attorney. So this gets back to the asset versus stock sale question. And if it's sold as a stock sale, it's got to be sold free and clear, which means the owner keeps the cash in the bank and the buyer, and they pay off the debt, and the buyer brings their own cash to get it started, and they get a business without debt. So yes, you can absolutely sell a business without debt. And typically when we do closings, the debt is just discounted it's on the closing statement. Owner gets $1 million. They owe $100,000. Let's pay that off to the creditor at closing. And it's just one of the many wires that goes out. So yeah, you can sell a business with debt. Can you sell a business that is not profitable? And the answer to this is also yes. You can sell a business that is not profitable. In fact, non-profitable businesses get sold on a regular basis. It's not always a pleasant experience for the person selling the business because most businesses are sold based on their profitability. But I gave my poor man's valuation earlier regarding revenue, some percentage of revenue or some multiple of cash flow. If a business is not profitable, then it can't be sold on a multiple of cash flow, or it would be the business owner would be paying someone to take it away, which they could do. Anything's possible. But you're going to be looking at some percentage of revenues as a rule of thumb if a business is not profitable. And it's going to be a lower percentage than that 30 to 50% that I cited earlier. I don't know if it's 10% or 20%. There's really you're in no man's land once you start to get into what's the value of a business that loses money. Business buyers hate buying businesses that lose money because guess who's probably the best person to turn it around? It's the current business owner. They know what the problem is in most cases. The business buyer has to get into a non-profitable business, pay money to lose money, and it's like correcting an airplane that's on its way to crash. You got to correct, or else it's going to be ugly. So it's hard, but it's definitely possible to sell a business that's not profitable. Why would somebody sell a business that's profitable? I love this question. As an intermediary, we specialize in selling profitable businesses based on the answer to my last question. This is what business buyers want to buy, but why would a business owner sell that? Well, this gets to the most probable sales price. A business is typically valued on the profit times the appropriate multiple, and the business owner selling is selling because they're ready to do something else. Money is always a factor, but it's less of a factor when people are experiencing age, health, family matters, distractions, or maybe they've just done it for so long that they don't want to do it anymore. Maybe they have another opportunity that has been calling to them, and it may be financially driven. I had someone say, I can run this business and make $100,000, but I'm a licensed pilot, and if I get out of this business, I can make $250,000 every year by being a pilot. And I like that better. I like flying. So people sell profitable businesses all the time for all different reasons. What you want to listen for if you're a business buyer is, are these reasons personal to the business owner, or are they selling a business because there's something wrong with the business or the market that the business is in? So that's why people would sell a profitable business. You want it to be a personal reason. Can you sell a business that's filed for bankruptcy? Yes, you can. Businesses that have had bankruptcies in the past get sold on a regular basis as an asset sale or a stock sale. Technically, with an asset sale, there should be some protection for the business buyer because they've started another company, a new company, or an established company that hopefully doesn't have the bankruptcy. And if there is a bankruptcy, it's been quarantined on the other side from the other company. But a business can be acquired through a stock sale even if it's had a bankruptcy. Bankruptcies are an event in time, and a business buyer can do diligence to buy a business just understanding the risks that they're stepping into. I know people who've done it. So yes, you can still sell a business that's filed bankruptcy. How do you sell a business without a business broker? Okay, so I'm a business broker, but I'm going to answer this question. And I will also say that you may be surprised to hear that It's not uncommon that business owners come to us and they say, do I need a business broker to sell my business? I have a buyer and they're going to pay my price. And my answer is not really. Business brokers typically help find the price and the buyer. So if you have those two things, unless you just want additional guidance, here's a great transaction attorney. Close your deal. So that's kind of an extreme case where the business owner has all of the pieces to the puzzle. But if a business owner wants to sell their business without a broker, it can be done if you can do confidential marketing by yourself. So think about, how are you going to market the business so they don't know it's your business? When people call or email, how are they going to use properties, create a new Gmail or a new phone number to reach out? And then if you answer the phone, are you giving away what the business is? So you got to work through all of that stuff, but absolutely you can do it. The other challenge to think about is if you are trying to run your business and create a competitive marketplace and juggle multiple buyers, how well are you going to run your business? What happens if we see all the time that people get all their eggs in one basket, one buyer. They get really far into the process. Business starts to kind of not do so well, and that buyer backs out, and they find themselves in a prone position. These are just some of the advantages of using an intermediary, but there's no rule that says you have to use an intermediary. I feel that when we serve our clients, we add the value that we charge and then some. But you could absolutely go it alone should you choose to chart those waters. Should I sell my business or close it? This is a tough question, and it does not surprise me that people are asking the internet this. If your business is one of those business that's losing money, and you can close it, and you understand the repercussions with your landlord, with your franchisor, whoever you've made obligations to, if you can get out of those obligations and stop the bleeding, that may be your best option. This is a sobering conversation that we will often suggest to people who come to say, can you sell this? If you're upside down and there's no value there, you may just be digging a hole deeper. Just stop digging. Close the business. The question really becomes a legal question of what obligations do you have to continue? Should I sell my business or keep it? This is an interesting question because we do have a lot of business owners that want to sell, but there's some type of stress that they're dealing with and they want to get out of that. And often we'll connect them with a business coach. What if instead of selling, you could fix this problem that's making you want to sell? What if your business could be less dependent on you? What if it could make money without you being there every day? That's usually what happens, the decision of keep or sell. And I would point them to business coaches. If you see a path to fix the problem, you may not have to sell it. It's a personal question, and you definitely want to work with a professional business coach. There's a lot of business coaches out there that can help you with that. How to sell your business to a competitor? This is a great question. Competitors can be great business buyers. They can pay more or less than the general market. They understand your business. They won't take training. The answer is yes, you can sell to your competitors. Go into it knowing the risks. The how is to use appropriate non-disclosures to share little bits of information at a time, to have lots and lots of meetings, hopefully with an intermediary, to manage what's being shared, to redact customer lists, just to share the right things at the right time. This may be more of an art than a science, but it absolutely can be done. And a great campaign process includes competitors as well as non-competitors in the market of buyers. So yes, you can sell to your competition, but don't limit yourself. Somebody who's non-competitor may pay more because think about it. They need everything that you've put together. Your competitor may say, I just want to buy your accounts. If you ever hear, I just want to buy your accounts, that means they want a discount. That's one of the challenges of selling to your competition. They don't need everything that you have. What is the role of a business broker in selling? Again, I'm a practicing intermediary. We sell other people's businesses and we create competitive marketing opportunities so that business owners don't have to go with the first or only buyer that comes along. In fact, we have managed processes with more than 500 buyers at the same time. Imagine running your business and attracting and answering every question of 500 plus buyers. They all need to be Mirandized so they don't go blabbing about your business being for sale. They all want answers to a bunch of questions. They all want to know detailed cash flow. They're just going to be very pestering. But imagine if they all knew that there were 499 plus others of them. Do you think they're going to try and lowball you? No, the smart ones will not. In fact, I've had a professional buyer tell me and tell a client of ours, hey, I wanted to buy your business before Neil came along. And I know I only offered you this much, but now that I know that you've listed it, I have to pay you more. I don't want someone else to buy it. And now that I know it's publicly available, I recognize I'm going to have to pay more because someone's going to buy it now that you've listed it. If that's not a testimonial for business intermediaries, I don't know what is. But that is a true statement from a savvy business buyer. In addition to creating a competitive marketplace, there are tons of other reasons where an intermediary should add value. I mentioned confidentiality. I mentioned managing the process. How about using technology? How do you keep up with 500 buyers unless you've got some technology? How about diligence? How about a data room where some people can get in and look and other people can look and see who's looking at what? I could go on, but just know that think about an intermediary like an attorney or an accountant, although we don't even charge by the hour. It's costs money for professional help. Not all intermediaries are professional, but if you can enlist the services of a professional intermediary, it will pay dividends. Most of our clients have no idea how much work we do, and at the end, they're extremely grateful, and they say, thank you so much for doing all that. What is the difference between selling a business and selling a company? That's a weird one, right? The answer is, I don't think there is a difference. This may be a question about entities and how something is organized, but business and company are interchangeable. And this opens up a tangent of mine. I want to ask an attorney, what's the difference between an NDA and a confidentiality agreement? She said there's really not. It's just legal mumbo jumbo that attorneys like to use. And I bet another attorney would say, oh, there's a huge difference. But yeah, business versus company, there's really no difference there. Can I sell a business idea? I love this question. This is a complicated one. We get this all the time. I had an idea, it's worth $1 million. Is it? Is it worth $1 million? Who's going to pay $1 million for your idea? If your idea makes $300,000 to $400,000 and has for a long time, there's a good chance someone's going to pay for that idea. But now it's more of a business. And then an IP attorney may disagree, or an IP broker may disagree, but it's my belief that you can't sell a business idea. That a business idea, and some of the next ones that we're going to get to, are all in the bucket of goodwill. We addressed goodwill earlier, but to summarize again, business sells for $1 million. Assets are worth $100,000. There's $900,000 of goodwill that included the idea, the name, the website, the cash flow, the customer base, all the stuff that you can't touch. And the business idea fits into that. In fact, the next question is, can I sell a business name? The exact same answer. Now, corollary on the business name, we have had business owners say, my family name is in the business. Can't have that. Or you have to pay more. Basically, they put a prohibitive cost of buying the name. We have had businesses change their names slightly. We sold a diner and it had the name of the family in front of it. It was the family name, Shiny Diner. And they said, well, you can have Shiny Diner, but you can't have our family name, Shiny Diner. And the business owner was savvy enough to not to trademark, but to get the website before they listed so that the business buyer could get that website and move everything over. And we put in there that they had to remove the family name from the signage within a certain amount of time. They had actually said, for an additional, I forgot how many thousands of dollars, they could have the family name, but they were really just saying, please leave our family name out of this. And that's one of the disadvantages of putting a family name into a business. I'm a much bigger fan of keeping it generic. How to sell my business on eBay, Facebook, or Craigslist? I love this question. So this gets to where business buyers are shopping for businesses. There is a very large listing site, similar to Zillow, where most business buyers go to look. And there's actually different listing sites for different sizes of businesses. I think you'll find that the Craigslist, the Facebook Marketplace, and the eBays, you'll find businesses for sale on these sites. They tend to be the smaller businesses, the mom and pop, one person operations. But we have listed businesses in addition to the major listing sites on these network sites as well, just to get more eyeballs on these opportunities. And typically the buyers that we have got sourced through those social media sites have not been that great. You're starting with anonymity and it only gets worse from there. But yeah, you can list the business on these sites, but you can't sell it. So the selling is doing all the hard work of answering the questions, getting offers, getting through diligence. So you can list it, but you can't sell it on these different sites. Can I sell my business without selling my real estate? Yes, 100%. By the way, did you notice that almost every answer to these questions is yes? Because I just did. And that's pretty interesting that most of the things that people are worried about, it's okay, right? So you own your business, you own your real estate. Great. We're going to separate them when we do the calculation of value. Even if you don't pay yourself rent, we're going to separate them when we do the calculation of value. Business owners out there not paying yourself rent, making a lot of money, well, you could have saved money on taxes, and we're going to impute a cost of space when we calculate your cash flow. I won't get too into the technical jargon in this presentation, but 100% you can sell your business with the real estate. You can rent your business to your business buyer. Just know that most business buyers will want at least the option to buy your business. We've done that as well. Hey, I'm going to buy your business. I want to rent. I want to rent it, and we're going to include the rental negotiation in our negotiations for the price of the business. They're connected through the rent. Where is the best place to sell a business? So this gets back to the listing sites that I mentioned. There are different listing sites for different sized deals. Main Street, you see bizbuysell.com, businessbroker.net. There's businesses for sale. There's a cadre of business sites for Main Street, and then there's Axial, and there's other sites for larger businesses for sale. And then there's off-market type opportunities to sell a business. So a great intermediary will use the listing sites as a no-brainer, but will go the extra mile and push. We talked about Facebook. We push out opportunities on Facebook through our company pages, and we promote those through our personal pages. So we use social media to get the word out, because we found people that didn't know they wanted to buy a business until they see the opportunity. And we use our proprietary list. This is something that if you aren't in the full-time business of selling businesses, you're not going to have a list of business buyers, but if you do it every day, you're going to accumulate people who want to buy businesses or their contact information. And there are other ways. The short answer is, once you've packaged a business into a presentation, a blind listing, you want everybody to see that. We've called associations, we've called schools, we have reached out to anybody who may be in contact with a buyer in that orbit to let them know there's an opportunity there. That's kind of what it takes. As many buyers as possible, you want them to know there's an opportunity so you can get that process started. How to find business buyers is the next question, and I kind of answered that. Listing sites are the low-hanging fruit. Going to meetups if you want to meet with the folks that are out there looking for deals, actively looking for deals. Not too different than real estate. There's a bunch of places to find deals. By the way, the people that are full-time buyers are looking for great deals, whereas the people that are looking for a business that's listed, they're more focused on, can it be financeable? So there's an off-market and there's an on-market spectrum, the same way there is in real estate. How to sell business inventory. I think we touched on inventory back in business valuation pricing. My approach is right-size the inventory. This is a conversation that we have with business owners. Right-size the inventory before you go to market. Look at what the historical trends were for the appropriate amount of inventory, and do your buyer and yourself a favor. If you've accumulated excess inventory, this is just an asset management. Bring the inventory levels down or up to the appropriate amount. It ties into working capital essentially, but just make it simple for the buyer. Some businesses, people have to pay extra for inventory. It messes up the financing, but ideally people, unless it's a jewelry shop or a furniture store, most people don't want to buy excess inventory. They don't want the inventory to be a significant part of the deal. But sometimes that's inevitable. How does business size affect the sale process? The answer is it tends to help. I'm going to give you the exception to the rule first. We have found when selling restaurants, smaller restaurants, there's more demand than larger restaurants. We will sell a small cafe or coffee shop 10 times faster than a 5 or 6,000 or 10,000 square foot fine dining facility. It's more intimidating. If you're a restaurant buyer, you tend to want something that's low risk, easy to manage. But again, this is the exception to the rule. In general, if we speak about cash flow, bigger is better. With very small businesses, you're kind of fighting with, does it make enough money to support a living? As a business buyer, could I just go work and get a W-2 job and make the same money as taking all of this risk? But once you get out of this orbit so that a business makes $500,000, $1 million, $2 million, now the business can afford to install management. Business buyers will pay much, much more. Much, much more. In fact, if the business makes over $1 million or $2 million, now you're into private equity territory. If it's the right type of business, then sophisticated buyers will have an entire management plan to take over the business, run it for 5 to 7 years, grow it, and then sell it. So that can be very competitive, and multiples go from 1, 2, 3 up to 5, 6. The sky's the limit. And when you hear on the news about companies selling for 10 or 12x of EBITDA, those are typically the publicly listed companies, where a very, very big company, that's typically M&A, very, very big company bought another very big company for some strategic reason. And we hear about that in the news, and a lot of small business owners think that those are the appropriate multiples for Main Street businesses, but the majority of small business owners will sell, back to my valuation earlier, for 1 to 3 times cash flow, which is owner's benefit. If you take $100,000 out of the business year after year through your officer compensation and your health insurance and your retirement pay and what's left over with net operating income, there's a high probability your business will sell for between $100,000 and $300,000. I know that's a big range, so if you want a detailed valuation, reach out to me, direct message me, connect with me, and then we'll have a conversation. But if you want to hear something else, put it in the comments, and we'll go from there. Until next time, thanks for watching. Mahalo.